It's Jeremy Williams with the Bannock Real Estate Group, and I just want to let you know we put together these videos because it's really important to us that we get relevant, accurate information into the marketplace as the market changes so you can make the best decisions. If you like the information we're providing, please subscribe. It makes a big difference for us. And then also, if you'd like to see a certain video about a certain topic, make a comment. We'd love to hear from you. With that, let's get into it. Hey, it's Jeremy Williams, broker owner of the Bannock Real Estate Group, and today we're really excited because we have a special guest with us. One of the things we're trying to do is introduce you to some of the advisors that we call up and who we talk to when we have questions what's going on in the market or someone that might be able to help our clients. So today we're joined with Steve Cooney with Primelending, and you got some exciting news. You just recently moved companies, and can you tell me a little bit about that?
Yeah, been in the business for the last 17 years, worked for different bank here in town, and recently in May moved over to Primelending. So Primelending's been in Montana for about 5 years. They've opened a branch in Bozeman. It's a big company. It is based out of Dallas, Texas, and we're under an umbrella of a bank over there called Plains Capital. Plains Capital is also under an umbrella of what's called Hilltop Securities. And so a lot of backing, a lot of different financing options, and which is kind of why I moved, for just having an option to reach out to different borrowers and have options to go.
Well, that's one of the things that we've been very appreciative when we work together. Is it seems like you have a big national presence, but you have like local, hometown, good feeling for our customers. So you have the backbone, but you have that more localized service.
Absolutely, that was super important to me too.
Yep. Oftentimes in our marketplace today, when it comes to lending, everybody's talking about the interest rates. And I think a lot of times one of the things we're trying to do is bring to the public of, hey, there's not just one type of loan. There's just not one type of interest rate. There's actually a lot of things that we're doing to still get people into housing at affordable prices. And I know when I called Steve up the other day, he had some great programs, and I thought maybe you could share a couple of the programs that you guys have to help offset the difference or help people into housing.
Yeah, sure. There are some great programs, and I believe now is a better time to buy than any time, especially in this market. So my goal and what I tell people is get into a place now, take advantage of the programs that are out there or what's going to fit your needs, and if rates come down, we can refinance you out of there. But it's different programs that I love, Jeremy. The one I have been going and touting the most is called a 3-2-1 buy down, or a 2-1 buy down. And to give the short and skinny of it, it's you start at the current market rate on a 30-year fix. So let's say today's 6.625. You take that, and for the first 12 months, you drop 3 points below that for your starting rate for 12 months. Wow. So the first rate is 3.625, and you hold that rate for 12 months. After 12 months, it goes up 1 point. So you have your 3, then your 2. So the next year it's 4.625. The year after that is 5.625, and then you're fixed for 30 years. Well, the remaining term of the loan at 6.625.
Wow.
So, and you can refinance out of that at any time, and you do get the money back of what is spent to buy that down. It's called a temporary buy down. So if the borrower has $450,000 left on their loan, but they have $20,000 of the buy down that was used, their balance actually goes to a principal balance of $430 when they do refinance.
Oh, no kidding.
Yeah, so they do get all that because it's considered a temporary buy down instead of a permanent buy down. Super helpful for clients. It is changed a lot of buyers' perspective in this market because they get to come into the market right now at a low interest rate, and the next year is even a low interest rate considering, and it's helping.
Yeah, and if you've watched some of our videos on what, no crystal ball, but what we're prophesizing for the future, it sounds like that would give you that bridge, that in between, to get you to the point where our market readjusts and we get down to those low interest rates. I imagine something like that could potentially save you if you're going from a 6 and 8 down to 3 and something, I mean, that's got to be over $1,000 a month difference, I imagine.
Yeah, depending on loan amount, for sure.
Yep. So it's real money. It's ways to, in fact, we're working with somebody that's you're using this project on right now, and it's worked out really well. So that's great. It sounds like there's some great products coming to the marketplace, and I know you and your institution has been on the forefront of, creating that flexibility to help get people into housing. And I think one of the great things about these products is, you mentioned it's a great time to buy a home. Well, what we're seeing is sellers that are more negotiable. You can get a better price. We're able to negotiate different terms. We're able to negotiate a lot of times sellers even contributing towards, say, buy downs and other products. And so it's an opportunity where we can get it at a better price than we've seen the last couple of years. We can now get at better rates than we've seen in, well, at least a year or two, and give you the bridge to get to a point where you can get into that long-term loan. So a great option. Now, of course, everybody always asks me this. I wouldn't let you get out of here without asking, what's coming in the future? What do you expect over the next 6 months to a year?
Oh boy, it's tough. I mean, I do expect rates to come down. I don't know when they'll come down. We have seen some softening in the market, and as far as rates, they did come down out of the 7s finally, and they're holding as of right now, but it is volatile. It's like the stock market. It is bouncing around. The bonds are up and down daily. We get alerts to float, alerts to lock, and we can get multiple every single day. The Treasury's come down quite a bit, which has been a good sign, and that is a huge benchmark of where 30-year fixed rates or fixed rates in general play off of. And if that can continue to come down and inflation continues to soften, and we did get some good inflation reports, which has helped rates quite a bit. I mean, enough to be about a half less than they were even at the beginning of last week.
That makes a difference.
That's a huge difference, especially on like a buy down, or the ARM. If you're thinking of an ARM rate below, 1%, maybe below 30-year, that helps a lot. Now your ARMs are in the 5s and more buying power to borrowers. But to have a crystal ball and to guess, I don't know. It's 50-50 split right now. I have a lot of guys that analyze the market and that I follow, and some 50 are saying 6 months they think rates could come back down into the 5s. The other 50% saying they see rates up into the 8s and 9s. I'm going to go with the more optimistic approach and say I want to see the rates down, and I'm going to believe that they're going to come down in the next 6 months.
Sure. Well, of course, there's no crystal ball, and that kind of plays into some of the information that we've been talking about for the last couple of weeks, if you've been watching our videos, and what we can maybe expect over the next year and why we're in the situation that we're in. But it's also one of the reasons that we call Steve up when we have questions. He really pays attention to the market, and it sounds like timing's everything. So if you're looking for a house right now, or maybe you have a house under contract, when you lock is going to make a big difference too, and really talking to someone that understands that and is paying attention to it's going to be important, so you're just not arbitrarily giving away money, right?
Yeah, for sure.
Well, I certainly appreciate it. Again, Steve, thanks for coming in and sharing some of your insight. And if you're looking to get a loan, you're looking for options, you want to know how we could get into a house at a better price, and on the mortgage side, and what some of the tools are out there that get you into that house where it might not be otherwise feasible, please reach out to Steve. Where can we reach you at, Steve?
You can reach me at my cell phone is best. It's 406-214-2550. You can also reach me at my email. It's Stephen, Stephen, .Cooney, Cooney, at primelending.com.
Fantastic. Again, Steve Cooney with Primelending, and thank you for coming in today.
Thank you so much, Jeremy.